To Radio Cayman, the voice of the Cayman Islands.
Live from Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
A very good morning and warm, if ever so slightly wet, welcome to Money Sense. I think your commute was a little bit on the wet side, was it, Emil?
Yes, it was, because I swim here.
Excellent. Well, that's obviously ensures a little bit of dampness on the skin. I'm Simon Caudry, and I am delighted to be rejoined after what seems to me to be an imponderably long absence from the radio show by Mr. Emil Kalinowski. Emil, after having swam here, you look remarkably dry and yet refreshed, so a pleasure to see you again.
It's a pleasure to see you. My absence, in the meantime, has resulted in stocks falling, bonds falling, gold falling, Bitcoin falling. All asset prices are falling. I think I should be here more often to keep everything afloat.
Oh, to keep everything afloat. I see what you're saying, as opposed to your absence gave you time to cause all of this.
My initials are EK, not SBF. And ladies and gentlemen, we're talking about that American Ponzi, Charles Ponzi, the latest Bernie Madoff. But this time he was from Stanford or MIT, very well-to-do. And he ran away, and he's in the Bahamas, not in the Cayman Islands. Good. Well, because that's all the time when I go see the movies, they're always, oh, yeah, we're going to move the money to the Cayman Islands. And you hear the groans in the theater. Oh, but now, hopefully the Bahamas get some opprobrium. Okay, back to you. You're the host.
I like this line of attack. It's let's pick on a different country and give them a good beating, right? Well, I mean, obviously, good news floweth over. The Donald has re-announced that he's going to rerun, so that only makes things more exciting in the world that we're about to face.
Yes, it's a double-edged sword being an American, isn't it? So there's some benefits, and then other times you have to explain to people that the Donald is... Well, you have to explain American politics. Here we are.
Yes. Well, leaving politics and humour aside, I don't think there's any time for that at this time in the morning. I want to get straight into a unpleasant conversation with you, Emil. And not favorite. That one, don't worry. But the one I want to get involved with you on is inflation. And we are in inflationary times. We're in difficult times for a lot of people. Prices are extraordinarily elevated in things that they're buying and purchasing. And this is an investment show, or pretends to be at the very least. And one of the subjects that typically comes up when the word inflation is used in an investment context is, well, how to protect against inflation. Asset classes that do well during inflationary times. Things that actually don't go down during inflationary times. And I'm curious as to what your view is on this and where you stand on this, because historically there were the great gold bugs who would say that during inflationary times, gold will be the epitome of a store of value. And then there were the crypto enthusiasts who said during inflationary times, crypto will be the bastion of safety. What is a store of value? Nothing seems to have been in the last 2 years or so. So what should investors be thinking?
That's a great question. Everything has gone down in value, hasn't it? Real estate, crypto, coins, what else? Gold, precious metals, stocks. I was going to hide behind stocks was going to be my answer. But they're all down. Bonds, everything is down. So the question then is there anything to protect us? I don't believe that I'm aware of anything, because there seems to be a worldwide run for cash right now, and assets are being liquidated worldwide.
Which in itself is a really quite curious thing, because in a world of inflation of 8%, earning zero, I guess it's better than earning -5, but earning zero and knowingly earning zero, because cash sitting in your hands, sitting in a bank account, in a current account is earning zero. In a savings account, maybe 3 or 4%. But in a current account earning zero, that's a terrible investment decision as well.
But maybe they're concerned about getting the return of the capital, not the return on the capital, because as we're seeing right now in the crypto space, there's fraud taking place. There's been a lot of froth. It's called the everything bubble. We've heard this over the last few years. And maybe people are concerned that we're coming to yet another liquidity crunch that's been building, and they are liquidating, raising cash, and they feel safer to be in bank accounts with large institutions. Here's Okay. Do you want to ask me a question on that,
Well,
or do you want me to?
Carry on. Perhaps you're going to come to this in a sense in your answer, but I want to link the safety in a bank account to our bank account safe. We've gone through. It's still somewhat relevant, or somewhat in my memory, the experience we went to what seems almost yesterday, but 10, 12 years ago or so now, the great financial crisis, where bank accounts, a lot of them seemed very unsafe at the time, particularly institutions' accounts with investment banks. But do please continue and see if that can be melded in somehow.
Well, it's very likely we won't experience a GFC exactly like the way we have before, and it's my understanding that banks are safer than they were before. So that seems like a reasonable place to hide. But here's also a question that's something that may wrinkle your brain, Simon. Are we experiencing inflation, or are we experiencing consumer price increases? Well, half a dozen or 6. Is there a difference? You may be wondering. Consumer price increases are caused by several things, including a devaluation of the currency, but also perhaps because of supply and demand imbalances. So there are those academics that believe that inflation is caused by a ubiquitous surplus of money flooding across the economy, raising the prices of everything everywhere. And that's inflation.
That's monetarism for you, for the audience.
I'm sorry?
That's for the audience. That's monetary economics, the principal theory thereof.
And therefore, should we maybe think that this is the reason that these consumer prices are rising so fast is because the global economic system, the supply chains, the logistical chains experience a full body shock. And that's why there's been disruption, because they were built for efficiency, not resiliency. And after COVID and the government interventions and everything since then, the war, we have been experiencing supply shortages and not a surplus of money flowing over the economies. And therefore, perhaps that's why stocks or gold and such are not performing up to snuff.
In some ways, for normal human beings, though, supply imbalances, if you think of the last time that there was a material supply imbalance which had such meaningful shocks, was the late 70s, the oil price shock, which caused a massive imbalance in supply and demand in what was then the only source of heating, the only source of fuel. And there was coal as well, but for transportation purposes. And the problem with that sort of supply shock is that it causes unilateral rises in prices, which no one can quickly adjust to, and it doesn't happen over an extended period of time. It happens almost instantaneously, and that's kind of what we've seen here. We haven't seen in our economy, we haven't seen people going down to the supermarket and finding that their ubiquitous lettuce has gone up from $2 to $2.10 to $2.20. It's gone from $2 to $7. There's been this one-off repricing which has caused, and in cars, in all sorts of other assets or products, it's caused really quite an unpleasant shock to people who weren't ready for it. Whereas a sort of a monetary expansion, a monetary driven inflation sort of is a little bit more prevalent because everything sort of trends upwards over time.
Including wages.
Yes, indeed.
Which
yes,
I don't
and wages
believe
are
is the
very,
case.
and wages, to use an economist expression, are very sticky in that so far as they don't tend to rise as quickly as prices tend to rise, particularly when prices rise so dramatically and overnight almost.
It's a lousy time, and there seems to be nowhere to hide with your money to protect yourself from the increases in consumer prices.
So what is a store of value nowadays in the context of all of this? I mean, is gold no longer, has it lost its luster? What should people be thinking of being as a place where money should be parked to protect from the dangerous?
Oh my gosh. That's a whole show. I can't make a recommendation, but I would think you want to diversify over multiple asset classes and gold, stocks, bonds, and such, and see where it goes from there. I believe we're in an age of disorder and danger, and deflation is still ahead of us. And the things that do well in those are the U.S. dollar, gold, and U.S. Treasuries. And 2 of those 3 have been doing very poorly lately, haven't they?
And that's the real problem. They've been doing poorly at the same time, and that's what's so unusual. Changing tangent ever so slightly, albeit connected, and I mentioned this in my intro to this topic. the crypto, the alternative asset space, has been cast upon us as by its protagonists as being this indelible solution to government action, whether it be government monetary action or government fiscal action or government expropriation action, and that it would hold its value during times of crisis. And I guess the question is, has it or has it not? And I don't mean to ask that flippantly, because obviously things are down. But a lot of these prices are down for reasons that perhaps might not be connected to the intrinsic nature of that asset. Maybe we can discuss that a little bit more.
Well, I am a big believer that prices are not tied to the intrinsic value of assets, that they're instead tied to the rise and ebb of capital flows, international capital flows. So it is no surprise to me that cryptocurrencies and commodities and other asset classes are in a lull or a downdraft because there's an international capital liquidity crisis and unavailability of money. And it makes complete sense that, it's the rising tide floats all boats, and then a falling tide similarly brings down asset classes. But I'm in complete agreement with you that the proponents of cryptocurrencies, not only did they say it was some sort of indelible reaction or savior, safe harbor to government action, but to the human character, to human flaws. Yeah. This was the answer. It was almost a religious fervor.
And the irony, I think...
Oh, my goodness.
And look, I would never be accused of being anything but skeptical of a lot of things, and whether that be the protagonists of crypto, whether it be the protagonists of other asset classes, I treat things fairly skeptically. But I do have a little bit of sympathy right now for people who are supporters of that, because the intrinsic, perhaps the wrong word, but the underlying value of what a decentralized system, or ledger system, can offer has been rather lost in what seems to be, frankly, human fraud. And that in and of itself has correlated with a economic environment where other asset classes have gone down. So the correlation as it appears between crypto prices and other prices has seemingly been swept up as being highly correlated, and because of this sweeping up of the reaction of money having been lost because exchanges and other people have behaved very inappropriately with them, have done things they said they weren't going to do, the next day gone and done them. And so people lose money means that people lose incentive to value something. So I'm wondering what your perspective might be in that respect.
That is the way of things in markets, isn't it? Mm-hmm. Everything gets tossed out. The baby does get thrown out with the bathwater in capital markets because capital is a coward. They run for the hills as soon as there's something wrong. I'm thinking of the Asian financial crisis. There was good assets in those countries, but everybody sold everything they could. They ran for the hills as soon as there was just some concern. That's what a bank run is, right? Yeah. That's the problem with where central banks are supposed to step in and say, this bank run is a panic and people are withdrawing currency and money from good banks because of that one bad bank. It's perfectly normal and natural.
And the irony, I suppose, is that bank runs are prevented, inverted commas, by central banks being in existence to be this backstop, this lender of last resort, this organization that can print unlimited quantities of whatever it wishes to make sure that humans that have money in their banks have the money if they need it. The crypto and the alternative space in that regard was designed to obviate the need for that. But that doesn't obviate the need if the protagonists in there are actually not behaving, or are behaving in ways that banks used to behave 120 years ago, which is doing things with people's money that they didn't know was going to be done with it. And that's a bad situation.
That's the way banks behave 120 seconds ago. It's human nature.
Yeah.
I just finished reading a book about Iceland and Icelandic financial history. And should I get into it now, or should
No,
we go
we're pushing all the way through to 8 o'clock.
Okay, super. And you may be thinking to yourself, well, look at the crypto space right now. Unregulated, Wild West, yeehaw. No, and this is what happens, fraudsters and such. No, this is what happens in all human endeavors where there's money to be made. People are attracted to it to steal it. The Icelandic banks, regulated, observed, guess what? Absolute frauds, absolute frauds leading up to the global financial crisis. The individuals at the top of those banks used them as their own personal funding vehicles. They were extending loans out of thin air to buy their own stock over and over for years and years.
Which has uncanny parallels to what happened with FTX, using investor funds to buy the stock that they issued to provide the capital to a fund that they ran.
Regulations are nice and important, but they don't prevent fraud from taking place or from when there's money to be made. The whole Eurodollar system, the whole creation of US dollars outside of the United States was done in reaction to very strict regulations after the Second World War. So I do want to blame what happened in the crypto land on bad actors, but I don't want to say that, I don't want to give people the idea that if only there was regulations, that something like this could have been prevented. Bernie Madoff, Enron
was arguably the regulator. He was chair of the SEC. Was it chair of the SEC? I think it was.
That sounds familiar.
Chair of an important organization in the US, and yet ran under the noses of everybody however many billions of fraud. Look, I think that's a really crucial point, and I think a lot of that gets lost in the chaos that surrounds crises like this and crises in the past. The inevitable reaction, when you think it through, the inevitable reaction to any crisis is to regulate that crisis from happening again. But almost by definition, every crisis will be new. I remember, a little while ago, watching a regulator, and they say that they wanted to create regulations that engendered the right sense of act, the right behaviour. But the very simple fact is that you can't regulate for good behaviour, because fraudsters will want to operate where money is. Mm-hmm. And the financial sector has money. So a regulatory environment cannot, will not, and should never be expected to prevent fraud. It has to be accepted that fraudsters will be smarter than regulators. And there is a duty on investors, on people who have their own money, whether you're an investor of many millions or an investor of very few dollars. It's your duty to take enough care as to what it is you're doing. We have regulation in Cayman, and yet Caledonian Bank went under. We had regulation in Cayman, and yet we had 2 frauds that happened over the last 15 years in the investment side of the business. Where was regulation there? That's Cayman. We had regulation in the US, and you talk about Madoff. It should never be expected that regulation will stop people having their money stolen, frankly.
A healthy dose of skepticism on the part of investors will go a long way to securing positive returns over the long term.
Yeah, but then that leads to the question, well, if regulators aren't looking after you, in
that FTX scandal, it sounds as if the owner of this crypto exchange was buying the regulators. Not literally, but almost literally, supporting them, funding them, being best friends with them, having his parents be in contact and in touch with the regulators of his sector.
Yeah, it is amazing.
Sure.
When you do the postmortems of some of these scenarios, it's amazing how much the level of fraud that's being committed is correlated to the amount of gifting that people do to good causes and such like. There tends to be a remarkable consistency of correlation there. Madoff was a huge supporter of the arts, a big supporter of the regulatory environment. It goes on and on throughout history, unfortunately. So if it's not regulation that we can rely on, how do simple human actors like myself or others, what red flags do we need to be looking out for? What things are there? You said you were just doing some research on the Icelandic crisis. What learnings are there from that people can digest and use to better avoid stepping on those particular landmines?
I suppose if it's too good to be true, that's a warning. Reading about economic history, finding people that you can trust, that you can meet with, as opposed to people who are far away, might be helpful. Diversifying across multiple independent advisors. But perhaps the best example would be the Asian financial crisis and the Icelandic banking crisis, is just trying to be taking a step outside. But that's so difficult. But these authors, both of the books that I've recently read on both of those crises, arrived to the party after it had started. So the people that were already investing there, already participating, were inebriated with financial returns. And then if you arrive at the party a little bit after it started, you can see the people are already drunk, but they don't know that yet, right? They're having a good time. They don't know that they're gone. And if you're coming in later, if you're coming in from another perspective, if you try to remain skeptical, then you can perceive that there is, that it's gone too far, perhaps.
The trouble is, and look, I think that's probably absolutely right. The trouble is, it's a painful ride being skeptical while those people are buying their Lamborghinis or buying their beachfront property or buying their private jet. That's a very painful process to say, well, maybe I should just put in 50% of my life savings. Just that will get me that private jet. That will get me.
Literally true. The author, Jared Bibler, of the book Iceland's Secret, was literally picking up his dirt cheap 4x4 from the shipyard, and the person that was giving it to him was looking at him askance because every other car there was a Porsche. Now the person delivering all these cars in Iceland thought nothing of it. Everyone should have a Porsche. But Jared, who had just arrived from America and was an outsider, was thinking, what is going on in this land? But yes, you're right. And the same is true of one of the greatest minds in human history, Mr. Isaac Newton, who invested in the South Sea Bubble, if I remember correctly. Of course, it wasn't called the South Sea Bubble at the time.
It was the investment opportunity of a lifetime.
That's right. And he said that he was a genius. He was the head of all manner of societies. And these common rubes were making money hand over fist. So why shouldn't he? And he invested and he, of course, lost it.
I guess the moral of that story, to the extent there is a moral of that story, perhaps, is that if you do end up losing money as a result of being duped by bad actors, at least you're in good company with the person who has led to the greatest understanding in human history in terms of physics and science. So that may be non-consoling while you're watching your bank balance decline from X to 0, but at least in hindsight it can be something that you can have a little joviality over.
Deep hindsight.
Deep hindsight, yeah. I wanted to ask you as part of this show what worries you about where the world is going, and I'm already worried before I've asked you that question. But we had discussed this concern that perhaps you and I both have about the breakdown in capitalism and what that might mean for the outlook for the economy. So if I can, a 30-second history here. What's happened over the last 25 years, 30 years or so, has been a transition in Western economies, certainly, and by that I mean the obvious Western economies, from a state-directed model to that where freedom of human expression, human interaction, human activities has been permitted and encouraged. And there's been a blossoming of international trade, of international connectivity. You mentioned this, the just-in-time approach, which allows prices to be ultra-fine, margins ultra-fine, and prices for consumers as low as they possibly can be. But there's a lot of geopolitical stress and a lot of geopolitical tension right now. Are you optimistic this can be resolved, or do you see this as a problem ahead?
I am optimistic it will be resolved, but I'm sure it will not be resolved in a sit-down dinner, but via some sort of crisis. Now,
hang on, you're optimistic it'll be resolved, but it will take a crisis to get us there.
That's right.
Well, that's okay. Go on.
Well, that is better than what I am scared of, which is a perpetual zombification of our culture, society, a continual downtrend.
So you want this crisis to happen sooner than later, so that we can get through this problem?
Well, I very much regret it, but it's, yes, pulling the Band-Aid off quickly. I regret it. In the future, I know I will regret these words because I'm sure it'll be a very unpleasant crisis and I will not be happy with what's happening. But at least historically, that seems to be how we reset the global order. I remember in 1998, after the Asian financial crisis, Bill Clinton speaking to the IMF, and he said that if we do not set a global order, a global system, whereby we can all operate within the rules, a monetary rules of the road, another Bretton Woods, let us say, then we risk capitalism and freedom And because people will believe that if capitalism's not working, then freedom's not working, then what is it in for? What do they have work for them? What do they have at stake in this sort of system? And guess what? It stopped working a decade later in 2008, and you will not be surprised that worldwide surveys showing freedom, faith in democracy, and those manner of measures have all turned down since 2008. So we are heading towards a world where people don't believe in democracy and capitalism because it's not working. Why should they believe in it? It's been failing for such a long period. So I want something to arrest this decline that we're on, and historically that has been a crisis.
Have you formulated in your own mind the most plausible cause of this crisis?
One word: Martians. Martian invasion.
Okay, well, that's two words, isn't it? Martian invasion.
It could be a terrible economic crisis. It could be a pandemic. It could be a natural crisis, a meteor.
Amazingly,
or
the
war,
pandemic that we experienced, I guess a lot of people might have thought that would have been a bringing together of the proof of capitalism almost working, because the private sector stepped up and delivered an incredible response. You saw in all sorts of ways, whether it be medical, whether it be protective gear, and allowed people to continue with their lives. And yet that in itself has created a lot of skepticism in society, and that's quite confusing, really.
That's my worst fear. There's an author, I believe his name is Ross Douthat. He's an American. He writes for The Atlantic or the New York Times, and he wrote a book recently called The Decadent Society, and his thesis is that there will be no crisis, there will be no return, and that we will simply be declining for generations. And that is the worst case scenario.
So, Emil, you are leaving us on a somewhat wet Thursday with the hypothesis that it will be better to have a horrible crisis so that the world can reset and move forward than it will be to avoid the crisis and lurch indistinguishably from one pothole to another, while the car gets more and more beaten up until eventually it has no functioning parts.
And the reason why is because when a crisis hits, we are forced to all work together. All the differences that we have right now, all the differences you and I personally have, you being from Britain, me being from America, that irrevocable break, we will work together. I'm joking, but all our differences will be melted away, and it'll be melted down in a crucible, and we will come out of it unified, a unified society, ready to confront the future because we have overcome some terrible crisis. I
feel as though that's a rallying cry for Emil Kalinowski, President-elect 2043 or something like that in the US. That's going to be your campaign slogan. I will come and observe. At the very least. But before I do leave and before I say my thank you, while you were in Iceland, did you watch Eurovision, the movie, before you went there? Arguably the best movie of all time. I'm hoping the answer is yes.
Believe it or not, I found myself at the end of that Icelandic peninsula where he played on the keyboard. Well,
that takes me to a higher plane of satisfaction than is imaginable. Emil, it has been an absolute pleasure having you join us on the show this morning. The conversation has, as always, been most exciting and most interesting. I hope it isn't too long before we can reconnect and do this again. So thank you very much.
My pleasure, Simon.
Finally then, before we depart, as always, a quick reminder that this show is available on the CFA Society Cayman Islands webpage. It's also going to be on YouTube, and it will be distributed through Twitter and also on LinkedIn over the next few hours or so. With that, if you have any questions, email us at moneysense@candw.ky or tweet us at moneysenseradio. All remains for me to say is thank you for tuning in, and do please join us again in 2 weeks' time.
You've been listening to Money Sense Radio Cayman Time Check 8:02. This time check is brought to you by our friends at Foster's.
Beast mode activated.
There's always room at the family table, and Foster's is there to keep everyone fed.